Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address. Disclaimer time. This is where I tell everyone to lighten up. It's just a podcast. Trading is like that roller coaster at the amusement park. Thrilling, unpredictable, and potentially stomach-churning. What works for one person might leave another clutching their hat in the wind. Our hosts and guests, they're awesome, knowledgeable, full of insights, but we're not financial advisors. So don't rush to make any investment decisions based solely on our banter. Always consult with a professional or do your own research. Plus, let's face it, we like to have fun, laugh, enjoy the trading ride together. It's all in the name of good podcasting fun. So remember, take it easy, don't bet the farm, and keep your seatbelts on at all times. Thank you for listening. All right, hello everybody. Welcome back to the China Shop, home of the Band of Traders podcast. I'm Kyle, and today we've got Victorio Stefanov of TradePro Academy on the mic with us today. What is up, Vico?
Hello. Thanks for having me on again. It's been every few months, every quarter, not even every quarter, every few quarters.
It seems that we try to get at least 2 a year in, I think, is what we've been doing.
Yeah, I feel like that's more accurate than my
Right.
perception of what's going on.
Yeah, usually one at the beginning of the year when you do something like really cool, like some kind of workshop, and then we catch up with you at the end of the year.
Pretty much, yeah. I think that's how it goes.
Right.
We've got like a month left until the year ends.
Well, I got to get my my market outlook 2025 from you because every year
Oh
you've done that for us has been like spot on.
yeah. This I thought this year honestly we'd have a little more turbulence at like Q1, but
Yeah.
I don't know. My target was 6,000 at the end of the year, around there. Like I have no complaints honestly
Right.
on the S&P.
Yeah, no kidding, man. Dude, so how's Europe, man? You're back in Canada, right?
Oh yeah, oh my god, yeah. So I came back for one of my good friends was getting married, so I came back for a wedding and then see my parents. I hadn't seen my family and my parents, I guess, in about a year, but been in Europe for I guess 2 years now. It's been over 2 years since I've officially moved, and I haven't really gone back and forth. Like I did a recent little chat
Oh yeah.
podcast, yeah, about traveling and trading actually, and
Oh,
I had a few questions about that. But
what was
I,
that on?
like in terms of,
What platform was it? Was it?
oh, you'll see.
Oh, you bringing it back?
Yeah. So yeah, maybe whoever listens to this might get a little hint of that, but.
Oh, dude, I'm excited. Yeah, George was hinting at something. I thought that might be what it was, but he never actually told us.
Yeah.
He came over, watched the Tyson fight with us last, was that
Oh
week or two
yeah.
ago?
He was telling me, like, I saw him because he's in Toronto too. Like he was in Toronto. I met up with Fatty as well from Trade Pro yesterday. We
Yeah,
hung out, had a little chat.
dude, Fatty was awesome. We had him on not too long ago too.
Yeah. It's good. I like doing videos or content with Fatty because you can just like talk. Like
Yeah,
you don't have to like lead or anything. You give him like two topics and he just like goes off, which is like great.
right.
Sometimes like you need like some time to think of things and he just goes.
Yeah, that's kind of like when I got Baba. Whenever I bring Baba on, I can just tee him up on a topic, and then I got
Yeah.
half an hour to think of something else.
Yeah.
So you aren't back in Canada for good then, right? You
No,
just
no, 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 absolutely not. I've been in Europe for 2 years now, and I come back like probably like once a year, like for a
yeah.
month, let's say, see my family, see some friends, and then go back. I've like one of the biggest things I would say this year was my kind of shift towards trading more so the European session.
Oh, I was gonna actually ask you about that because yeah, trading in Europe, like RTH happens at what time for you? It's like four
It's
o'clock.
like, yeah, dependent. Like usually, like depending on where I am, like 3 or 4 p.m. like is about 9 a.m. Eastern time.
Yeah.
So like 3:30 p.m., 4:30 p.m. is like where the market opens, like depending on where I'm at. But usually those two time zones, like I don't really go to the UK.
Hmm.
So
So you're trading more like this, the Euro overnight sessions.
Yeah, I find it honestly very chill and like calming
Yeah.
because it's more towards my like trade style because I like I know that Bob you're probably kind of similar to Bob where it's like more of a tighter, smaller like scalp to begin with and then kind of see where it unfolds.
See, I'm actually, I think your style more aligns with my style. I
Okay, I
kind
didn't.
of
Yeah,
want,
I
yeah,
wasn't 100% sure. Last time we talked, I felt like it was in the middle somewhere between both of ours because I know Bob
it
was telling me
was.
he's like hitting like an 8 point stop on Nasdaq, and I'm like, dude, whoa.
Right. Like I've actually gone away from Nasdaq for a little bit, actually just
Yeah,
focusing
sure.
back on ES again.
Yeah, Nasdaq like has it gone a little too funky?
Well, it's not just that, but it's like if I mean, I recently after the FTT collapse, I don't know if you trade props at all, but
A bit. I just like I don't really trade them that much. I feel like that's something that we can talk about. Like it's kind of
yeah,
like a reserve thing on the side, but like I do know a lot of people that were like, oh, like what is it, FTT? They
yeah,
just like rug pulled everyone. I'm like, I need a
yes.
little more intel.
I mean, that was pretty much it. And then if you were in the Discord where they were leaking everything, then you probably got banned for a day for joining that
Oh
too.
no, I wasn't. I wasn't. I didn't. Yeah, my Discord was like flying high. Like again, like some of my friends, they were like, "Hey, listen, like I can't." Like texting me, he's like, "I can't go on Discord for like a day or two." And I'm like, "What the hell happened?" And then
I
one
tried
of them,
appealing that shit too. They were not.
they didn't care.
No,
Right?
nope, they did not give a shit.
What? Yeah, I don't really know what happened to that, but why did that kind of deter you from Nasdaq for a bit? Like, what's the correlation?
Well, okay, yeah. So it's kind of a convoluted path that we'll have to get through to get to it. But so basically, I was trying to trade with prop firms as a way of like managing risk, right?
Yeah,
Especially with FTT. FTT was awesome because it was a one-time fee. You didn't have to pay the monthly renewal, so you can just kind of sit and grind away at a prop account the same way you would do a live account.
yeah.
I got within like maybe a day and a half of targets worth of hitting a goal for getting the payout on that
You were
thing.
like a day away. You mean?
Yeah, basically like
Okay,
day
okay,
and a half
okay,
maybe. Yeah,
okay, okay. Sure, yeah.
and then they rug pulled the whole thing.
Oh god.
And I mean, I didn't lose much. I mean, obviously, I was just working one little account, but
Yeah,
I talked to a couple other guys that were stuck for multiple five-figure losses that they'll never get out of that thing.
yeah, yeah. I've heard of similar
And
cases.
then you look at some of the other I can't remember who sent it to me. Someone sent me some screenshots of some big crypto things that were happening at the same time that they're able to match their accounts and show that like $13 million that just got split up between all the founders.
I did see that actually, and I
Yeah.
saw like the main things that I saw about that because again, I'm not like super deep into that space. I don't really know too much about it,
Hmm.
but the main thing that I saw is like all of the I guess like executives or whatever they want to call themselves, like the founders or like main like the top people from FTT, like the guys who like started it.
Yeah.
I just saw like the internal conversations that they were having with one another, and it was like it was disgusting. I was like, oh my god, like whoever I don't remember any of the names, but like there were a few traders that were doing really well, and they're like, no, this can't be real. Like we're
Right.
never gonna pay these people out. Like this has to be like some kind of BS. So it's like the fact that they were actively looking for excuses to just
Hmm.
like not pay people out. Like I know someone who was waiting for like months, and they were pushing to pay affiliates out without paying profits out, so those affiliates could continue to push their
Yep.
product. Like that's like I guess the bulk of what I know about this, and like from my understanding, they did have the capital to pay the majority of those payouts out
Kind of looked like it, didn't it?
because it was like what it was 15ish million, right? Like that's a lot of money.
Right.
Like there I don't think any of the accounts that were like quote unquote leaked had a cumulative total above that at least.
We might be able to go look through and total that up, or at least see the ones that they were like specifically
Yeah, the
flagging
ones
as
the
like we're
ones
not paying this
yeah,
guy.
the ones that they were specifically saying no to, I know that
Hmm.
like they could have paid out at least a majority of that,
Right. Yeah.
you know.
Yeah. So that whole thing happened, and then I just kind of got burned out of the whole prop space in general.
Yeah.
Decided to start trading a live account
Yeah.
again. But here's the thing, and you trade a $4,000 account, and you want to keep your risk within 1.5% or so per trade.
Yeah.
It doesn't let you do much with more than maybe like one micro on an NQ the way I like to
Yeah.
trade, which is at least a 10-point stop.
Like I do agree with you 100%. Like I think like that's one of the I guess barriers on Nasdaq specifically. Like
Hmm.
like yeah, the I guess like the dollar denomination per point is smaller, but like if you want like a real chance, in my opinion, on Nasdaq, you're gonna have to fork over larger stops, unlike the
Yes.
S&P. So like you're risking more, and I had this conversation a lot between what's the difference between like let's say trading a smaller account versus like prop accounts. Like number one, like I would probably stick to the prop accounts that like are the most reputable, you know, the ones that haven't had
Hmm.
like that have like a longer history of
Payouts.
actually, yeah, like
Yeah.
doing good by like their traders and not like screwing people over.
And Apex is not the example to look toward.
Yeah, like I would say Apex is like mid tier, you know? Like I'm
Yeah.
not saying it's like the top, but like I'm not saying that it's like complete garbage either. They have their moments. I don't know that much either. Like I've traded Apex a bit, not much. Like I've had payouts, I've had denials, but like nothing crazy on either end.
Hmm.
It's been like okay, like I'll trade prop maybe 20% of the time, but I mainly trade like two different accounts, like a day trading account and a swing trading account for futures.
Yeah.
But I will do props as well because it's a way to diversify a little, I find.
Well, plus it's just the leverage that you get for such a small outlay of capital.
It
Like
is, yeah.
if you have edge in those in their environment where they are stacking the deck against you, like hats off then.
Yeah, there's a lot of rules realistically, and like I think one of the big things that people don't understand is like, let's say you take whatever kind of account, 100K or a 50K account, like you have a limited drawdown, right? Whether it's like 3 4K, I don't know exactly what the numbers are, but like it's all smoke and mirrors
Yeah.
because the real account that you have is the 2 or 3K, whatever it is. You know, that's the size of your account.
Yes.
So like if you're trading size on that kind of account, like you're kind of YOLOing it. You know what I mean?
Right. Man, it's just tough to find one that has like I don't know if they exist. I like the guys at Traders Launch. I like the what they were saying, but I haven't really followed them too closely to know if they're really like sticking with that message. There's another group out there called the Funded Futures Desk, I think, or the Futures Desk.
I don't, dude. There's so many right now. Like I only know of like the main ones, and I don't really like dive into them that much.
The only reason why I know those two is because I've been talking to the owners.
Yeah,
Like I like what the Futures Desk guys are saying. It's just going to be, I guess, really comes down to whether or not they follow through on what they're saying.
yeah, exactly.
Like limiting resets to one per day is kind of a that's like a big revenue for most of these prop firms.
It is. It is. Like that's the thing. Like you, I feel like there has to be some kind of middle ground realistically because like
Hmm.
these props are seen as shady in my opinion by like a lot of people, right? Like it's
Yeah.
not. There's so many of them realistically, so like they got to kind of protect their necks in terms of their reputation from that regard, but they also have to be able to like pay people out consistently. So like I feel like they're like props right now, the ones that are coming up and like the ones that are still established, they're kind of trying to find a middle ground between their bottom line as well as like loyalty to traders because like the industry is very saturated at this point and there has to be some kind of pull that attracts people towards xyz prop, like whether it's like pricing point, I don't think is like that big of a thing right now. I don't
Hmm.
think it's like the main deterrent or the main factor that traders look at or like accept or deny prop firms. I think one of the biggest things is the consistency of payouts as well as like the loyalty and like the
Yeah.
ability to abide by the rules that they set out for traders and like be consistent with that. So like again, I think at the end of the day, new ones, old ones, it comes down to like what's the track record of paying people out on time and like not making up BS excuses. So like there are a lot in the space. Like if I go down the rabbit hole, I can probably find like 10 that I
Yeah.
might like based on like face value, but at the end of the day unless you like trial and error and go through it, like you're never going to really know, you know.
Dude, even a company like Top Step, like you look at the you ever watch their Top Step TV, watch them trade their house accounts
Yeah, I
and
don't want to say too much about that. Like I don't like I don't know.
no,
I don't like
the only point hey, I'm not going to make fun
yeah.
of the trading. The only thing I want to say is where is their incentive at Top Step showing you their traders? It's not
They,
to show you good trading to get you
no,
to
it
make
is like I agree with you and like I didn't because like again, like I don't want to like I'll speak factually. I'm not
Yes,
saying
yes.
like factually an opinion based only on my opinion. No, like no putting down or no bringing up. I'm not affiliated. I'm not trying to like boost anyone or I'm not trying to like bring anyone down. But like that's what I had thought as well. Because why do Top Step TV with a quote unquote house money account? Now it could be real, it could not be real. I don't know, right?
Hmm.
I don't know.
I
I'm
think
not
it is real because I think I've watched the Dom change
okay.
when they
Like I'm
stick their
not
limits on.
hinting.
Yeah.
Yeah, like I'm not hinting at it not being real. It could be very well real, but like the incentive realistically is you get 10,000 people watching you live, right? I don't know
Hmm.
how many there are. Let's say a few thousand. I think it's between like 4 and 10,000 on average.
They get up to 30 at some days.
Yeah, so
Yeah,
yeah, on average, let's say like five.
probably about five.
At
Yeah,
a time. At a time, let's say five on average, which is like it's the incentive is what I think you were alluding to,
yeah.
right?
Though you watch them the house account, and they're just dollar cost averaging this 100 point ripper.
Yeah,
Like,
it's
what are you
not.
doing?
Yeah, it's not like I don't think that they think that's good trading either.
No, I don't think so either. But I don't think it's their incentive. Their incentive isn't to show you good trading. I don't think.
100% is the complete opposite, in my
Yeah,
opinion, at least, because like that's what churns the revenue, right?
yeah. So that's one of the things that got me kind of excited about the futures desk is just because the fact that if you pass eval with them, you're actually getting like a K9 or whatever the form is that you gotta fill out for your trading gains and losses, which is more than you'll ever get from the majority of these prop firms.
Oh, interesting.
Yeah, because normally they're never actually putting you in a live environment. So
Yeah, like is that so? Is that only for U.S. traders then?
I don't think so. I think they're more than just US. But
Because
it's invite only right now. They're still new.
oh, okay,
That's
okay.
not. I wouldn't. I wouldn't mess around with them too much until they've, like you said, proven a track record.
Yeah, like I don't know. I think it's a huge incentive to have the ability to get like I guess access to funds like this easily in a simulated environment. Like you can take it both ways because like realistically in these simulated environments like they are pulling volume out of the market, right?
Hmm.
Because like you have thousands and thousands of traders that are now with all of these firms that aren't actually trading real size, right? So it can
Yeah.
take volume out of the market. Now, I'm not saying that we're making a huge like retail storm of like pulling volume out of this market. You know
Right.
what I mean? Like it's not like, oh, okay, we've just cut the volume in half, but like there is differences realistically because imagine all that volume and all that size, all those accounts actually trading in the market.
Oh, dude, how many people have 20 accounts with Apex?
Exactly. So like imagine they're actually putting that kind of size into the market. Like it's going to make a difference realistically.
Yes. Yes.
Like it's not going to be as efficient. I feel like the efficiency of the market over the past year has increased like like drastically.
Oh, you think that might be a symptom of having less retail participating?
I do actually, and
That's
like
interesting.
I don't think that I don't think it's like a seismic shift in terms of like the size of retail that's no longer trading.
Hmm.
I just think it's more so the fact that there are a lot of new traders that have never entered the market. So the efficiency gradually goes up as time progresses if there's no new like participants
Right. If you don't
realistically.
have somebody,
Yeah, if you don't have like a
yeah,
patsy, you're not gonna like
right. You got to have some fish at the table, right?
Yeah, exactly. And like, listen, I'm not like it's not a conspiracy or anything, or like I don't think it's like
No.
factual, but like I think that there is some kind of indication of that, and like it does seem like markets are getting more efficient, especially on a larger scale in terms of like big big companies, large market caps, the overall market in itself, and they tend to be like a little harder to trade. I think like a lot of people trading like pennies or not even pennies, but like just say small caps and like lesser known companies, there's way less efficiency there, but like there's way less liquidity. Like right
Yeah.
now, it's just like everything's very tight. I think that could be for there could be like several factors that have um, influence over that, right? Typically, if
Hmm.
you have bullish moves, right, in a market, you have a bull market. It's not going to be volatile, right? You're not going to see
Right.
like crazy swings. So like that's one
There's no
aspect.
volume on this move up. Yeah.
Yeah, like, and then it just continues for another 30% higher.
Yes.
Like it's like that's like one of the factors like obviously when you're in a bullish market like the volatility dries up, right? You don't really have too much volatility, but when you do have downswings, the downswings are like very I would say organized and very quickly bought up.
Yeah.
It just seems like
And
the
they
inform
fail at like the spot where you're like, man, if they could just go another 10 more points, this thing is going to flush.
yeah, yeah, exactly. It's like picture perfect, you know? It's like a
Right.
little too pristine of like, oh wow, they bought the dip right where they were supposed to. Like what the
Yes.
hell? Like that's fantastic. But like I think from that regard, it it seems like these markets, especially in like mega caps and like the overall market is more efficient in terms of taking in information and like accepting that information. Like the level of uncertainty isn't very high right now. I think like a lot of the market is still just running based on earnings and earnings expectation,
Hmm.
where like and if it continues to run higher, right, day trading and intraday trading futures, in my opinion, becomes an easier game if you're looking at it from a very big perspective, where like scalping, in my opinion, becomes harder.
Yeah, I mean, well, anytime you got the wind at your back, it's a lot easier to trade as long as you're trading
Yeah.
in that direction, right?
Yeah, exactly.
You could try to fight this move all the way up, is just get chopped to death, or you could ride the trend.
Yeah, exactly. And I feel like trends like intraday, like whether they're up or down, they seem a little more, I want to say, like obvious
Hmm.
this year. I haven't like it, obviously, yes, I have been surprised. Like that's impossible to say that that's not the case, but like I feel like more rarely this year than like in prior circumstances. I just think like the volatility is just super dried up, and there's not really that many participants, especially like into the end of the year. Yeah, you have like a lot
Yeah.
of things to consider. Like you had the election, you have a new president, you've got the end of the year, right? Like there's a lot of things to consider realistically. You have like inflation while Jerome Powell is cutting rates. Like there's a lot of underlying stuff that's not necessarily clear yet. So like I think the best case, the market's just sitting there, and like a lot of market participants are heavy in cash because they're like, I don't really know. I don't know what to do.
I don't know that anybody wants to be holding a position through Thanksgiving weekend with all the Middle East turmoil that's going on, the things
Yeah, like
escalating with Russia.
see, those are like, I don't know. I like, again, in my experience, like it's kind of BS market reaction until
Right.
something very, very drastic happens. And like the chance of that happening this year, because there's like a month left,
Right.
it's like, I think they're at least going to wait until next year if things like that happen. Like, I
Right.
don't know. That's just my opinion. I feel like we're in a position right now where this market, everyone is like euphoric to either end, and is just going to like end up getting dull for a bit and then just continuing higher. Like I think too many people are trying to call all-time highs. Everyone's trying to like sell the shit out of this, and like it'll pull back a bit, like a few percent here and there, rotate for about a month, and then just continue higher.
Yeah, we talked to Eric Mason quite a bit lately. I actually been working on a new podcast with him, going through like the presidential history.
Hmm.
Uh, but one of the things, he was one of the biggest bulls coming into 2024
Hmm.
that I had known. And anybody who said anything bearish, he said, "Show me one piece of economic data that looks bad. I'll wait."
But he's right. Like
Yeah.
I don't know who he is, but I totally agree with him.
Hmm.
Like
I'll
I
have to
think
get you on
he's,
the mic with him. You'll like him.
yeah, that'd be great actually. Like I'd probably learn a lot. Like I feel like he has a good understanding of these things, and like
The biggest thing to do is buy Boeing after every incident.
yeah, like that's the thing. Like I think he's 100% correct, because what happened, when was it? Like whatever escalations we had this year, it's just like
Hmm.
buy that news. Like
Right.
if you look at the underlying, the only thing that I could have argued for in terms of like fundamentals or like economics, in terms of like it being maybe a little more bearish, or maybe being a little more uncertain, let's say, right? Creating
Yeah.
volatility slash uncertainty. I wouldn't necessarily just call it a massive bearish event. Would have been the fact that Jerome Powell is starting to go into QE and starting to unwind these rates while markets are at all time highs. That was the
Right.
only like big factor of concern that I was looking at. I'm like, this isn't necessarily the best time to be doing something like that. As like like when the Fed does that, it becomes like more of a preemptive thing.
Typically, when the Fed starts signaling their cutting rates, isn't that typically a downturn too?
Yeah, see, that's like it's typically like in the past it's been a like a preemptive measure before something larger of uncertainty is to come.
Mm,
So
okay.
like the trigger of those like Fed cuts typically, right, results in maybe a quarter delay of downside, let's say.
Hmm.
So like after we kind of got through that hump and through that, it doesn't seem like the market like really cares anymore, and it just continued higher. I was like, okay, well, that was the only thing that I was concerned about. I know like people on Twitter and stuff are like talking about the Japanese yen carry trade, like it's like, and like
Oh
credit
god, yeah, I
events and
hear.
like all this shit. I'm like, oh my god, get your head out of your ass. Like it's not like there's other factors that are contributing to this like continued bull, and like you're trying to call a black swan. Like that's that's why it's called a black swan.
Yeah, right.
Yeah.
How many times has Michael Burry claimed that?
He's Michael Burry's called the last 50. He's called the last 15 out of the last two recessions. Like that's
Yes, exactly.
it's like you get it head on once, and you think like everything is like this massive risk off event. But like I'm sorry, who was Eric? Do you say Eric?
Eric Mason is the
Eric
CFO
Mason.
for Quincy.
Okay, so Eric Mason, he comes on and he's like, show me one bad piece of like economic data. 100% agree. Earnings growth, earnings.
Hmm.
Like that's like one of the main constituents in like the health and the growth of like the stock market, the economy, right?
Yep.
You're looking at these things and like if earnings growth is so juicy, right? And earnings are so nice. I'm not saying they're like the best ever, like they've ever been, but they're good.
Hmm.
If they're able to sustain those levels while inflation is still like fairly high, then it doesn't seem like there's any massive underlying risk for this year. Like from the beginning of the year, even now, it doesn't seem like there's any underlying risk unless you get like some kind of cataclysmic black swan event that turns things down. Like going into next year, I'm not like super blindly bullish. Like I was pretty bullish this year, but I wanted to see a little more of a pullback, which we didn't get. You know,
Hmm.
like I started my first buying in 2024 was in April, right when we got a not even a big pullback. It was like 5%, I think.
Oh, that was a good spot to buy. Yeah.
So
And then
like
they tested you again in July, it looks like, or August.
Yeah,
Yeah.
August, like on my birthday, Sunday, August 4th, I bought a lot of things.
Dude,
like
that day is what ruined my bold prediction for the year that we wouldn't trade below 18,000.
the August, yeah, like
Yeah.
it was.
Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com. And that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address.
Like I think that was an overreaction. Everyone's like, "Oh my god, the carry trade's unwinding." Blah blah blah. Like, shut the hell up. Like, it's like
Right.
buy this dip. Like, don't be an idiot.
Yeah.
Like those events and like going into a seasonality which is typically bearish, but like earnings are coming out like nice, juicy. You're getting like decent growth. Inflation's like pretty freaking high. Let's be honest, right? The real
Hmm.
figures are not 2% inflation target. This is a year over year figure. It doesn't mean
Yeah.
anything. You know,
Right.
like over the past like 4 years of inflation's up 20%. Like this little drop doesn't mean shit. You know, like
Inflation always goes up.
yeah, it's
Pretty
like
much.
since 2020, if you look at like a cumulative curve of inflation, it's like it's disgustingly high, you know, and we're
Hmm.
at this like peak where it's like barely trickling lower, and everyone's like, "Oh,
We beat it.
congratulations!" Yeah, like it's a lot, but like if things are still going well like this on the underlying, like I don't necessarily see a reason to be like super bearish about this. I think like next year, yeah, maybe we could have some like rockiness into the end of like Q1, but like ultimately, I don't think that this thing's done, and I think like whatever recession or fears that people have kind of get pushed back a little. I think like towards 2026, end of 2025, for me, it becomes more of an issue that I might consider.
You know what makes me a little more on guard is not people calling the top, it's when people stop calling the top.
Yeah, yeah. I think that is a huge factor as well when people start getting very greedy,
Hmm.
right? Like at highs. I don't like that either.
That's
I just
also
haven't.
that's actually become a new indicator for myself. When I start feeling extreme greed, that's my key to tighten up my stops or take profit and close the trade.
It's I think that's a very very important factor. Like I've trimmed a lot of like longer term positions into these highs and like swings for the year into these highs, but like I don't know. I'm still under the impression that like it's we're still in a solid period where I think that we get like people get shaken out
Hmm.
like earlier in next year where like everyone's going to be super happy when we get like maybe a 10% drop or something like that.
Right.
And like everyone's gonna be like, I fucking knew it. Like, here are the tops. Like, we've called it. Like, everything is good to go. Like, start selling everything that you own, and then we start like rotating and pumping back into new highs.
Yeah, and it'll be slow.
Yeah, like
Yeah.
I don't know. That's my perception. Obviously, I take it step by step. Like I'm not like trying to predict anything, but
Let me ask you this then. Do the concerns of America issuing a bunch of tariffs on imported goods from Canada, Mexico, and China throw a wrench into any of those plans? Like, if those actually go through, does that worry you?
um, I think realistically, the whole tariff conversation, because like yeah, there are a lot of tariffs, especially like now we saw Canada, Mexico, China's been top of the list, right?
Yeah.
I feel like at that point, I guess like it would stagnate things a little. It's also dependent because I don't know what the import exports are like in the States. Like I don't know what.
Their biggest trading partner now is Mexico. That's overtaken China.
Okay, so Mexico being the biggest one,
Yeah.
well, yeah, that doesn't. It's not going to be the best aspect because like
Yeah.
prices are going to start to increase in.
Especially on automobiles, because a lot of our, when we started, leaning into that whole NAFTA agreement, a lot of
Yeah.
our manufacturing centers ended up moving down there because they could just ship them up.
Okay, so like a
Yeah.
lot of things are realistically going to be marked up in the States, so like they're going to
Yeah.
get things are going to get a little more expensive in that case. So like that's one of the issues that also ties into what the Fed is doing right now, like potentially another inflation cycle, right?
Hmm.
So when prices like even for tariffs, right, they get a little stickier for you guys over there because you're going to be paying a little slight little premium, right? So
Yeah.
that plus right cheaper money starts to kind of it doesn't like cancel out. I think that there's more of a perception that there's a higher potential for another inflation cycle as we saw with what happened throughout the COVID period.
Hmm.
Not as extreme, I would imagine, realistically, but like Jerome Powell cutting rates right now and looking to get a little more aggressive with QE going into next year. And I don't imagine Trump's going to let him off the hook without doing that. You know, like
Not he didn't last time.
exactly. So like last time, if anything's an indication, like it's going to we're probably going to see like fairly low rates, and that doesn't necessarily help what is going on with the tariffs as well. So I think like worst case scenario is another inflationary cycle where you have maybe a year of happiness in terms of market growth because again it's bullish
Hmm.
realistically, but you look at it from the underlying probably unemployment figures, earnings, things like that are going to get a little stickier, where you're going to be in a tougher spot, but it's going to be delayed in that instance.
Yeah.
You know, so that's like yeah, like I would say that is like tariffs plus rate cuts don't necessarily mesh very well, but like just tariffs in general, realistically, if especially if
Well,
like
he still has to get them approved too, right? I mean,
yeah, like
yeah.
we're talking like hypotheticals, right?
Yeah.
Like if that's the case, and like again, that's why I ask because I'm not like super versed in like what percentage of like goods and like everything is imported, especially from like Mexico. So like if a large component of like GDP is like coming from imports in the U.S. based on like the countries that are trying to get tariffed, like it's not bullish.
Right. Well, you mentioned Jerome Powell. I kind of wanted to ask your opinion on this. And how do you feel about the way he navigated this whole, um, um, I don't know what you're going to call it, the whole soft landing scenario?
um, I think bad personally.
Really?
Yeah, I don't think he should have cut rates to begin with because now they're kind of pinned because their first rate cut was a double cut right away.
Yeah.
Like no testing the waters, nothing. They're just like cut it. Like they may as well have cut a full percentage point, like you know.
Right.
So I think they're navigating it pretty poorly. I think that if they continuously cut rates like this, it's you don't really have that much powder, right? Like
Oh, right. Yeah, because they're going to.
because you're going to be at zero before this thing dumps 30%. You know what I mean? Like it's
Right.
and at that point their powder is starting to pump the bonds up again, right? So like
Hmm.
they go into full QE with like the repurchase program, which like the Fed's balance sheet. I haven't looked at it recently, but it should be over $8 trillion. Like that's ridiculously high.
Right.
Like the U.S. like deficit is like extremely high, and like I don't think they can afford to increase their balance sheet, you know, and like
Right.
that becomes their last, I guess, last tool, if you will. Like if rates are like drastically low before getting into something that actually requires some kind of intervention, it's like, okay, do we start just like purchasing bonds again and like creating this extremely vast balance sheet that there's like no unwinding from there, you know? Like
Yeah.
if you unwind that thing, like it really destroys a lot of value. And like the market is extremely overextended. Like we're trading into standard deviations based on like growth to GDP that are like very, very far away from what the standard is. Like where we are very high, I understand that, and like a lot of this is artificially held up in terms of valuations. So like in my opinion, I think that the rate cuts that happened were too aggressive, like right at the beginning. I think that they helped like bullishness continue into this market, but it just doesn't seem like the right time.
If the goal was to not have a recession, I think they've actually navigated at least the first couple of years of that pretty well.
Yeah, I think if the goal is like not to have a soft landing, I think the only thing that they've done is just like push it out further.
Interesting.
Like I don't think that we like come out of this without, because like look at it this way, like 2022 was a 35% drop in the market, right?
Hmm.
I'm not saying that this recession is 50-60%, but like a 35% drop isn't going to like, it's not going to be end of the world.
No, not really.
So
30% drop takes you to what? Like 14K on that NQ?
I don't even know, but like, is it 14?
If we're trading at 21, 30, a third of that would be what, 700 points or 7,000?
Yeah. So like
That's pretty
what?
substantial.
It's yeah, like it is big, you're right, but like that's not over like a week or two, you
No,
know.
right.
Like if you look at 2022, like that was throughout the whole year, right?
Yeah.
We started 2022 January, and ever since January we had this slow decline until like October, November, right? So it was like an
That
11,
was
like a
about
10.
30%. Yeah, it was just like 6,000 points. Went from like 18 half down to like 12,000.
This is 2022, yeah.
Yeah.
Yeah, so like
Or yeah, 22. Yep.
yeah, so like you start the year and there's just a slow gradual decline throughout the entirety of the year, right? Like no one was screaming recession then, right?
No. Well, we were, but that was it.
Yeah, yeah. Like, well, I'm saying like
Only because they
even
changed the definition.
yeah, exactly. Like it wasn't something that like in my opinion everyone was like super fearful of. You know what I mean?
No, but I think that was the first recession I got to actually like sit through. Or I would call it a recession. But it made me wonder, like, do we just not identify recessions as they're happening? Is that just something that we always look back on and be like, oh yeah, that was a recession?
Well, the way that like I identify a recession is from like the GDP standard,
Yeah.
right? Like
Shrinking for 2 quarters.
exactly,
Yeah.
right? Like that's like the main definition, and like realistically, like bear market versus recession, I think are different things.
Yeah, and that one was a really funny recession by any stretch. Like any other metric you're looking at besides the GDP, I think was showing that we were not in a
Yeah,
recession.
exactly. That's why it wasn't like I don't think it got like that much media attention
Right.
because like
That's
it
probably too why it was so grindy on the downside too. Because
yeah, exactly. It wasn't anything drastic. There wasn't anything that like quote unquote broke. You know what I
right,
mean?
right,
Like there wasn't any black swan event. You didn't have like subprime mortgage explosions. Like it wasn't
yeah.
there wasn't anything like that was that cataclysmic. And I think everyone compares whatever we have going forward, like 2022, and whatever we might have in the future to what happened to 2008, 2009. I think like that's what people are conditioned to look at as like a
There's,
quote unquote
there's,
recession.
did you see that one? And the what's the other one? I always see people overlaying the Black
The
Tuesday one. Yeah,
Black Monday,
Black. Yeah,
1987. Yeah, they're like,
really.
the overlays kill me.
No, no, we were right here in the
Yeah,
cycle.
then
Okay.
it goes up another 20%. I love when those posts come out because I'm like,
Right.
I'm buying this shit. But yeah,
Okay.
like I think pullbacks are healthy, and like again, black swans are black swans for a reason, right?
Yeah.
Like people trying to call a black swan every month for the past like 3 years, like you would have done a lot better if you just closed your eyes and bought like everyone else. Like,
I know.
have you seen like the bell curve meme where it's like the guy that's like low IQ on the left tail and the guy that's like high IQ on the right tail, and then like the guy in the middle that's like average, and it's just like the two guys on the right and the left tail, they're both just buying the dip. Like one guy because he's stupid, the other guy because he's smart, and the person in the middle is like, no, 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 I gotta wait for the recession.
That's fucking
So
hilarious.
it's like whether you're right tail or left tail, it doesn't matter. Smart or stupid, do the right thing.
Right.
It's so funny. But like, yeah, I don't know. I think that like when it comes like down to the topic of like recession, like massive pullbacks, it's one of those things that when you're in it type thing,
Hmm.
right? And if it just like keeps grinding lower, like I have some like very basic indicators that just like help me understand what's when it's like extremely oversold because I'm not like I don't know, I don't really
So your
short too much.
cumulative tick.
Yeah, like breadth, right?
Yeah.
Cumulative breadth, stuff like that. Like when breadth is really overextended to the downside on like multiple time frames, like 200 days, like
Hmm.
20-day, like averages, stuff like that. Like when all of them are super overextended, then I know okay, you're probably like bottoming out. You know what I mean? So it's
Interesting.
like they're very very basic things that like even like fund managers use to a different degree,
Hmm.
but it keeps you, I guess, like on side of like not constantly trying to catch like a knife just in case you
Gives
have
you,
like
yeah, it gives you a repeatable thing to look for.
yeah, exactly. And like
Yeah.
I've back tested it since like the beginning of like the SPY and the triple Qs, and like every time there's a major bottom, there's like they get extremely oversold. You just wait until they get not oversold when they start grinding back up, which like typically indicates a bottom between like 5 and like 7%, which is like fair,
Hmm.
like you're not catching the absolute bottom. Even if I'm 10% off the lows, like I don't care. You know what I mean? Like
No, because you're paying that. That's the premium you pay for more confirmation.
yeah, exactly. So like I'm not one of these like doom and gloomers. Like I do like the upside. I'm bullish. Like I'm more bullish than bearish for most cases because like if you think of how the SPY is like engineered, the SPY is engineered to reconstitute the
Yeah, you take the
poor
shitty ones
performing
out and put
companies.
the,
Yeah,
yeah,
exactly. So like where do you think it's going to go in the next 10 years? Probably up.
yeah.
So,
That's why if people would point to this S&P as like a reason to buy stocks. Like, well, wait a minute.
yeah, yeah, yeah,
S&P
exactly.
goes up, but that doesn't. It's not the same stocks every year.
Exactly, exactly. Like there are big major names that you can kind of lean on, but even they're not always safe, like
Yeah.
you have years that some big names don't do very well and some years that do fantastic. So I don't know. Like I
Yeah.
said, I'm not like doom and gloom. Like I think that there is uncertainty for sure, but I think until everyone gets a little more confirmation in terms of the Fed, in terms of what Trump's going to do, I think it's going to be a very uncertain 2025 to begin.
Do you think Powell gets replaced?
No,
He has
I
to
don't.
step down, right? He can't be forced out.
I don't know the exact rules, but I know that he said he's not leaving.
I know he wants the legacy. He wants the legacy of being the person who negotiated COVID.
Yeah, like I think he's gone through so much shit, that guy, that he wants to just like end out on like a very good note.
Yeah, be the
You
guy
know,
who
like
beat,
yeah, he wants
the
to he
Black
wants to
Swan
go
event.
through yeah, exactly. He wants to go through all the shit. Like whatever he's already gone through so much shit. He's just like give me anything at this point. Like he in his last press conference they asked him, they're like, would you consider stepping down? He's like, nope. Just one word, nope.
See, I'm still of the impression that when he does finally get replaced, it's going to be Jamie Dimon.
Oh God. That'd be I don't think that'd be good.
I don't know. Well, did you know what the benefit to him though is if he takes that position, he can liquidate his JPM holdings without paying taxes.
No way, you're
Yeah,
kidding. What? How many millions of dollars is that?
I think you probably need to add some zeros to that.
You think it's over $1 billion?
I don't know. Well, maybe
I
we can
don't know
look
how
that up.
much he has, but like I know his total compensation, like I think is around 50 million annually.
Here
So
we
I
go.
don't know what kind of options and stocks that's included in.
2.6 billion net worth.
2 points. Oh God.
Yeah.
Oh my God.
And it's all largely because of his stake in JP Morgan. Yeah, so there's
Yeah,
a
I'd
huge
assume,
incentive to
yeah, I'd assume
do
it's the
that.
majority of that. Yeah, that's a lot. Okay, that's way more than I imagined. But
Plus, you see him in the news all the time. It seems like he just enjoys getting involved in that stuff.
he does, yeah. I don't like. I think he's a pretty intelligent man, honestly. But I don't think that necessarily translates to being able to be a
Being
good.
good at monetary
Yeah,
policy. Yeah.
yeah, exactly. Like,
No.
yeah, I don't. I think he's really smart and he's like good at what he does. I think he was like a very good banker, like before J.P. Morgan. But I don't necessarily think that that's what we need. And I say we because like I trade the U.S. market, not that I'm.
Right. Well, speaking of things that we need, then, so we're getting kind of close to the point where we can start wrapping this up. But TradePro Academy, you said you got some sort of specials going on.
Oh yeah, so like for Black Friday, we're doing like 60% off for the first month. I think it's like $88 for the first month, and we're doing. Well, I'm doing a kind of like mentorship
Oh,
program.
you're
So
opening that up again?
yeah, like it's a small portion of like what I do. Like generally, I'll work with like people one on one throughout the year, right? Like to
Yeah,
a select audience, right? I want to make sure it's the right fit, but I'm going to be doing about 3 weeks of a similar program to for everyone that's like involved at TPA. So it's going to be recorded live, and those recordings are going to be shared. But it's a very basic premise of what I believe can give you the edge in the market. Well, not like let's say not the edge, but like to have a very defined, concrete system that allows you that gives you the tools to develop an edge and a better understanding of the markets, right? So like
yeah,
the general premise of it is I'll be going through here, let me just read this off. Like I'll be going through auction theory, like
nice.
well, first of all, I'll be going through the tools that I use, right, to help people understand the system that I trade, what it is, like
Yeah,
how it's like kind of constructed, and like start the reverse engineering process behind that. Then we'll talk about auction theory, getting like a very good understanding of auction theory, and then I'm gonna go through like I think like 2 sessions of like the A plus setups that I use. So there's I think like I can't remember exactly how many there are. There are like 6 or 7 like that I've noticed are the highest probability trades that are based on both order flow and auction theory.
oh, that
So
sounds awesome.
we're going to spend time doing those. It's like kind of like a playbook.
Yeah, what is
And
that
then
starting?
it's starting December 9th. I might have messed up the dates because I believe, no, it wasn't you. Someone else told me that New Year's was on a Wednesday, so I completely messed the dates up. But
Oh,
it's going to start the week of the 9th.
week of the 9th. Okay, all
Yeah,
right.
so long story short, week of the 9th, and then well, I guess second week of January, it's going to end because the first week of January is nothing.
Yeah.
So, yeah, like
First week of January, take it off.
it is done, yeah. So like we'll be talking about like execution, risk management, entries, target decisions, right? Because I think a lot of people don't have a very good understanding of that, and I think that's like the most important aspect, right? Like how do you know when I get out? Like how do you know how to hold? Blah blah, and like talking about progression as a trader, journaling, your favorite topic.
Journaling.
Um,
Yes, I finally got
the
a new leather bound journal that I that started
excellent.
using. Ah, it feels so good to write in that.
And then like a topic that we had today, right? Trading small accounts versus prop accounts and like getting funded and actually getting paid. Like
Yeah,
we'll take a look at like the differences between those and like what's going on there. But that's going to be a big topic towards the end.
I feel like we could
So
probably cover that one with you again any other
yeah,
time you want to come back.
yeah, yeah,
I'm sure. I know Bobo would love to talk to you again.
yeah, for sure. I haven't seen him in a while. I know he had some like issues in the States, right? Like where he was at.
Yeah, he was in the middle of that giant hurricane that hit
Oh
North
shit.
Carolina, South Carolina.
I didn't fully know it was that, but damn, that's crappy.
Dude, no, he was bad. He had um, his whole entire basement got flooded out.
Oh
They had
my
a tree
god.
fall on the roof. His parents' house was like couldn't even get to it. Like all the bridges washed away.
Oh my god. Well, I
But
hope
I mean,
that.
yeah. Go back and listen to the one that we did with him after he came back from that, and just
Okay, cool.
it's really interesting to hear how the community like pulled together. It's really heartwarming, actually.
That's nice. That's good to hear, man.
Yeah, yeah. Well, man, this has been awesome having you back in here. TradeProAcademy.com. That's where you can find. Is there a code that they enter for the discounts, or is there a link?
There, if you go onto the website, you should probably find it as like a pop up or a banner, or if you're like in our Discord, it's in there as well.
I'll grab it
But
and make sure it's in the show notes so people can get
yeah,
to it
I'll
easily.
I'll send you the link.
But yeah, I'll definitely want to check that out. I know Mark D really enjoyed working with you a couple years ago when you first started rolling out those mentorship things that you were
Hmm.
doing. He had a lot of really good things to say. So yeah, if you can take advantage of that, I would definitely jump on that. But I think that we should probably call it here so everyone can get back to visiting their families. So please join me in thanking Vico for slumming it with us. Visit Trade Pro Academy to learn how to trade like Vico does, and you can stay up to date with the show by visiting bandittraderspodcast.com. You can take a look at our huge back catalog by guest. I will be back soon with another exciting episode for you to like, share, and subscribe. But until then, remember to trade like a trade pro and have a wonderful holiday weekend. This podcast is intended for informational and educational purposes only. It does not constitute financial or investment advice and should not be construed as such. The hosts, guests, and contributors of this podcast are not licensed financial advisors, brokers, or professionals. Any trading or investment decisions made based on the content of this podcast are solely at the listener's discretion and risk. Trading and investing in financial markets carry inherent risks, and past performance is not indicative of future results. Listeners should conduct their own research and seek advice from qualified financial professionals before making any financial decisions. The views, opinions, and information shared in this podcast are those of the individual contributors and do not necessarily reflect the views or policies of the podcast creators or associated organizations. Produced by China Shop Productions.